First and foremost, everybody, thanks for joining us today. I know that we've got a few deadlines coming up over the next couple of days, so hopefully this session today will be very helpful in getting through one of the big topics that we all like to talk about, which is obviously fixed fee billing. Now, as a reminder, this session is going to be recorded today, so don't stress too much if you have to step away, make a cup of coffee or a tea. It'll be sent out to you, but you can feel free to put everything away and have a listen as we run through it all today. Now, jumping through, I am going to be your host for today. So my name is Oscar. I'm one of the product specialists here at Ignition, and alongside me have one of our very own, Rebecca Mihalic, who, as you may know, is the Director of Business Depot, is also our Head of Accounting and the person that we all go to if we have any questions at Ignition accounting related. On top of that, you may also remember her face from being the most recent ex-accounting thought leader of the year for 2021. Had to pass that crown on recently, but absolutely still a thought leader in our minds and in our hearts. How are you going today, Beck?
I'm great, Oscar. Thank you for that amazing introduction. Yes, I've handed over Thought Leader of the Year. Somebody else can have some thoughts in 2022. However, I am excited to be able to go through fixed fee billing and the way that's changed my practice many years ago when I first implemented it, and some great ways that everybody on the call today can make that work in their own firms and how Ignition can help.
Beautiful, beautiful. Very much looking forward to it. So getting into it, to set a bit of an agenda for the session today, we're going to be covering a few things. So first and foremost, the what. What is fixed fee billing? Where is the crossover between time billing and fixed fee? We're talking about why 2022 is the year of change, why now is the time to be moving to fixed fees. Obviously going to run through the how. So what does that process, what does that change actually look like? Having a bit of a deep dive into one of the more exciting things I've ever looked at, being a client service matrix and how we can talk and determine pricing. One of the big things obviously around communicating with your clients with any change, communication is key. So we'll be talking about how Beck thinks what the best kind of ways to communicate this change to your staff and clients, as well as how technology can help you with that engagement process. And as you may know, Ignition being a technology company, we love finding ways of helping our clients through the use of tech to make that that process as easy as possible. Throughout the session today, you may have some questions pop up. What I might just get you to do, instead of throwing it in the chat, pop it in the Q&A. That way we can kind of run through, I can ask Beck as they come through, and any tricky ones you might save till the end so that we don't get it all confused. But with that being said, let's jump straight into it. So first up, we're going to start with a poll. So I'm going to hope that I can get this right. I'm going to launch this right now, and it's just going to be a quick one as to what your current billing model is. So we'll give you guys about 30 seconds to answer this. Obviously great for us to kind of know where everybody is at in the journey, whether you're a fully fixed fee practice, you've got a bit of a combination, or if you're still all on an hourly or time charge basis. So got those coming through now. Might just leave that up for another 10 seconds or so until I start seeing the numbers drop. And 4, 3, okay, I think that's all stopped. So I'm going to end that, and I think I can share that, which is pretty interesting actually. Only one person here on a fully fixed fee model, so maybe looking for some advice as to how to continue that change. But a lot of people who are on a combination, and 13 people on a fully hourly. So Beck, some interesting stats to look at there. I'm going to stop sharing that, and what I'm now going to do is jump into it first and foremost with the big question: what is fixed fee billing? How is it different to what you're currently doing, and how it's actually probably the same as what you're currently doing as well? So Beck, let's kick it off.
Thanks, Oscar. So there can be some misconceptions sometimes about what fixed fee billing is, and I always find it important to come back and redefine it at the beginning of these webinars. So fixed fee billing encompasses quite a lot of different billing arrangements, but it's all about being able to set a price for your services in advance of actually providing the services. That doesn't mean you need to go into the job blind, or you're then permanently stuck to that price, but it's all about giving your clients and yourself, your team, some insurance around what revenue is going to be generated internally for this and what cost will the clients have to incur. And there's different types of fixed fee billing. So you can bill upfront and take all the payments before you even start a job. You can bill on completion, which is pretty much what we do now when we're time billing with our clients. It's usually on completion as we progress through the job, maybe at the end of the month. You can charge monthly recurring fees by looking at all the work that you would do for that client for the whole year, divide it by 12, and then charge them the same amount each month. That helps smooth out your cash flow and their cash flow. Or you can use a combination of the above. I use a combination of the above. I use upfront for ITRs. I use bill on completion for a lot of our clients who have good cash flow, so I'm not worried they won't pay me. And monthly recurring fees for clients who just like to smooth out that cost. So I'm doing all three, and you're more than able to do that as well. The key difference here again is just talking about price at the beginning of an engagement instead of after you've done all the work. Now, there is a lot of similarities between time billing and fixed fee billing that people don't often realize until you get into the nitty gritty of actually running out a fixed fee model. And some of the biggest issues that you have when you move to fixed fee can actually be around setting your price. But let's be realistic here. At the moment, if you're in a time billing firm, you're probably experiencing write-ons or write-offs. So you might be writing off your WIP because you want to meet your client expectations about what you know they think their fee will be, because there's already a perceived value. That'll be based on what you've charged them year after year. And there are some standard sort of rough guidelines in our industry around how much, say, a year-end job is worth. And when you do this, when you write up a job because you were more efficient when you did that work and you know the client will pay more than what's on your WIP, or when you write down to meet a client expectation, you're effectively using fixed fee, but you're just doing it the wrong way around. You're doing it at the end because there's already a predetermined value between you and your client. It just hasn't been communicated and there's no great assurance.
So, Beck, 2022, it's been a crazy couple of years, I think, for a lot of people. It seems like this was the year that everything was returning back to normal, offices filling up again, but some big changes, a lot of talk around inflation, prices increasing. Why is 2022 the time to look at something like fixed fee? Why is now the time?
There's probably two reasons or two big factors about why now is a great time to move to fixed fee if you haven't done it anymore. And one of the first things is actually around our clients' appetites. So their appetites and the way that they want to run their businesses has changed over the last couple of years. We've came out of many years of, relative financial prosperity for most businesses in this country. And now small businesses much more respect their cash flow. A lot of businesses in Australia suffered through points in time when they didn't know what money was coming and what money was going through their businesses through shutdowns, staff being impacted by COVID, and even now resource squeeze, inflation. All of these items mean that costs are really front and center at your clients' minds. So they're going to want to know what they're paying for and when. And all small businesses are now looking for that price and expense clarity. No one wants to dive in. And for a lot of small businesses in particular, our fees can be quite expensive. We definitely bring value, but forking out a few $1,000s at the end of the month when you finish their company accounts, that can be quite a daunting experience for a business if they're suffering through a cash flow issue. But if we talk to them and prepare them for that in advance, then we can work through why and how they're going to pay that. Then the other thing that we should be looking at as accountants is actually how we've changed over the last couple of years and what has the impact of COVID had on us in the accounting industry. So we too run businesses. A firm is a business. So we are having that impact where maybe we've had our cash flow impacted if clients can't afford to pay us, or we fall to the bottom of the list. They will pay everybody else except for their good-natured, trusted advisors who are continuing to do the work even when we're not getting paid. Moving to a fixed price agreement, particularly if you encompass taking fee details and pricing details up front means that you can protect your revenue, make sure that you've got cash flow coming in, and be confident that the work that you're going to do for the client will definitely get paid, and you can continue to pay your own staff. That upfront pricing will also save you so much money in chasing bad debtors if your client doesn't agree, explaining your invoice, or, heaven forbid, doing work that your client had no intention of ever paying you for. It also means that your team will know that the work that they are doing is going to generate value in your business, and that value is defined right at the beginning of the job.
Absolutely, and I think changing the way in which you price your services being a big part of that. Obviously, the big change is it is a big change, and so making that move across from an hourly hourly billing model to fixed fee, it's going to need a process change. So, Beck, do you want to just kind of run us through what that actually looks like and how you make that change effectively?
Absolutely. When you start looking at moving to fixed fee, because it is a bit of a process, and you need to have some systems and lists and understanding of your current client base before you jump into this. So it does take a little bit of time, but where you should start is understanding your client service matrix. So your client service matrix, which you may already have, which is amazing. If not, you should be able to generate one relatively quickly. It's a list of all the services that you offer and what clients you provide those services to, because as we all know, as accountants and bookkeepers, we don't necessarily offer every single service to every single client. It's every package is almost a little bit bespoke. There's a few tweaks here and there, take something out, put something in. So understanding exactly what services you offer and then how many of your clients take what services, it's important to understand then how to go about pricing those. So if you don't know what services you're offering, you can't begin to understand how to actually price them. It's also a fantastic item to use your client matrix. Once you've gone through this process, you'll have an ability to also come back to that matrix to identify clients that might not be using all of your services. And it's much easier to sell additional services to existing clients because you have that relationship. And we can come back to that in a little bit more detail later. So creating a categorization tool is the next step after you figure out what services you're offering your clients, because now we're going to categorize out what kind of groups of clients you use. So for us, we use small, medium, and large as an example, and you might have more categories. But what's important here is you don't charge the same amount for, say, a BAS to every client. There are different complexities with different client arrangements, and you need an easy way to be able to figure out how much you're going to charge what client. So using the sizing methodology often works quite well. And some of the items that we use when we categorize will be how many bank accounts have they got? Have they got finance leases, and how many? How many employees? Could be level of turnover, could be do they hold stock? All these different items in your client categorization tool. And then when you have, say, a small client, they start ticking 2 or 3 of those boxes that move them up to a medium client, then you know you need to shift your pricing up to your next bracket and then moving on. I personally like the 3 categories. I think that works really well. But there are outliers, someone who comes in and they might be an extra large and get totally bespoke pricing. This is more about giving you guidance and confidence when moving to fixed fee.
Awesome. Mate, just as a reminder, obviously a lot of the stuff in this webinar, such as this matrix, is some fantastic content. We will be presenting and providing the slides to everybody afterwards. So don't stress and think that you need to burn all of this to your memory. You will get a copy of this a little bit later on. So back to you, Beck.
Thanks, Oscar. And so when we're going to come back, and Oscar's going to give you a demo a little bit later on around Ignition, but while we're talking about your client categorization tools, I actually wanted to talk about how if you use Ignition to go through this process, you will be able to segment your clients using tags, which will mean that any future billing will be very easy for your clients because you've already identified, you've already categorized them, and you're going to know which pricing model you should be applying to them immediately. So once you have both your client matrix, your client service matrix, and we also now have our client categorization tool, we can look at pulling together fixed fee pricing for our clients. So where I started with this when I did it myself is I looked at what were our average fees at the moment for, or in recent years, for all the services that we offer. And that became my medium tier amount that I was going to offer to all of my clients. So for example, a BAS, our average amount that we're charging for a BAS might have been $350. So that is now the pricing for my medium client. And I've taken it up for what I know a more complicated client would normally pay for our large client, and taken it down for the small client. And then replicating that process across the board for all of your different services. This then makes fixed fee pricing really easy, because now you know how to identify the services your clients are taking, identify what size and what category those clients are, and then confidently look at those services and the categorization and pick the right pricing model across the board. And this process will actually allow you to move some of that pricing, at least the draft pricing, away from the partners as well. Anybody in your firm that you could trust with this information will be able to put together at least a draft engagement for you, and that upfront fixed fee engagement.
Just the point there as well, Bev, one of the things that comes up across with me, people, potentially a bit of a misconception that you have a fixed fee, you charge $350, say, for a medium-sized client, that you have to charge that for every single medium-sized client. To that last point, it can be changed on a case-by-case or a client-by-client basis. Is that correct?
Absolutely. And that's why it's always a good idea to have somebody in the business who's maybe a little bit more confident with that client or pricing to do the final review, but you can do a huge amount of the heavy lifting now between technology and an administration member.
Absolutely.
So moving to Ignition as well, if that's what you end up using for your fixed fee pricing, pulling together a client service matrix becomes really, really easy, because all of your services, scope, and different prices, and you can put in different pricing levels against different packages, can all be housed inside of Ignition, which would mean pulling together a proposal using this information will only take your staff a couple of minutes each time. Now, one of the next biggest questions we often get around moving from time billing to fixed fee, a lot of accountants will take that whole extra step and they'll go, we're going from time billing all the way to not just fixed fee, but fixed fee monthly reoccurring fees, because we would like to smooth out our revenue for us and smooth out our clients' cost. But there's always this problem around unbilled WIP. What do we do with all that WIP that we have accumulated over the last 12 months, or will continue to, if we move our clients onto monthly reoccurring? So if you were starting, say, now in July, and you have a WIP accumulation at the moment for work that's done previously, I always suggest that you draw a line in the sand, and whatever you have accumulated to date, you should invoice today. Explain what it is and move it on. Then between now and then, say, September, October, accountants will do a lot of the bulk heavy lifting work for our clients is going to occur in the next couple of months. But then they're only going to pay us over a 12-month period. So there's two ways to approach that. The first year that we moved to fixed fee, the approach that I took was a combination of bill on completion and monthly reoccurring. So I cleaned out my old WIP. And then for the end of financial year work, so at the moment that would be 2022 work, I will bill that as a fixed fee, but a bill on completion. And then from this month, which is July, I'll actually be charging all the work that we haven't done yet over a 12-month period. So by the time I get to the end of June 2023, my clients have already paid for the 2023 work. So in that first year that we moved to this model, there was a huge increase in revenue. It's not quite double. It was about 1.5 times our revenue, and that does die back down in the next year. So as long as you are prepared for that and understand that change in your fees, this option is great because it protects you completely, and it means you're always being paid in advance. Instead, if you want to go straight into monthly reoccurring, what you need to do is make sure that your engagement has a clause in it that allows you to go back and figure out what services you've offered your clients and at what price, particularly if we go through, say, July, August, September, they're paying you off monthly, but you've done the huge chunk of work, and say they might leave for a variety of reasons in October or November, but they haven't really paid you for all the work you've done. You need to have a clause in your contract with them that will deal with that balancing up of fee versus service, and make sure that you're keeping track of all the services and all the work that you've done with them and how much they would be individually charged out at.
That's great. And just to kind of add to this as well, as mentioned, Beck did create a fixed fee playbook, which talks a lot about this. As part of the follow-up email, we will send you guys one of the articles, which is around how to move from bill on completion to more of a monthly recurring revenue model, which is kind of pretty much cover exactly what Beck's talking about here. So you'll have a bit more information around all of that. Now, Beck, with any big change, this is one of the biggest, I guess with fixed fees specifically, one of the biggest things that I hear is that it all sounds well and good, but humans, people, they are naturally adverse to change, right? What's their team going to think? What are their clients going to think when they present such a massive change to them? How do you explain that change?
The way you explain the change is going to depend on who you're explaining it to. And don't forget, you mentioned, Oscar, the team, and the team is really important because these are the people who need to be on the journey with you to make sure any change rolls out. They're the people who are in the trenches with you and those who are actually going to make this happen. So when you're going through the process of deciding how and when you're going to implement fixed fees, explain it to your team as early on as possible. Tell them why you want to do this, what's the impact on your business at the moment using time billing, and give them all of the training they need. So help them understand, where did your client service matrix come from? How did you come up with these fees? What technology are you going to use? And also, who's going to be responsible for running out this new program and the ongoing responsibility after that? Just make it all very, very clear and put together some great procedures. Train your whole entire team on those. They will also be the people in the front line having to respond to client queries about this process. So give them a script, let them know what they can and can't say to the clients. They don't need to stick exactly to the script, but after they've gone through that 1 or 2 times, they'll feel much more confident answering those client questions. With any change whatsoever, whether or not it's a technology change or a change to process, I am a big advocate of assigning an internal champion, because that means that person can constantly go back and check what's changed in this process. How is it updated? They become responsible for training the team if there is a change to technology, a change to legislation, a change to process. That's the person who becomes responsible for it. And it should not be the same person who's responsible for everything all the time, because that can be incredibly overwhelming. And take feedback from your team. We don't always, as partners, get everything 100% right, particularly if you start to step back a little bit, or you've got team members who have a high level of client interaction. They know what works and doesn't work for them on a day-to-day basis. This process should be helping you and them and the clients. So make sure that you have a safe space where they can share their ideas with you and take on their feedback. You don't need to implement everything they ask you to, but make sure that you actually consider it. So after that, the biggest next challenge that we had, once we had everybody on board in the firm and understood why, was communicating it to our clients. We just wanted to make sure that our clients understood exactly what was going on and what was changing. And more importantly, that not really a lot's changing. It's just a confirmation at the beginning of our engagement around price. So we communicated out to our clients quite early, and any change that we implement, whether it's a process change in the firm or it's even a legislation change, early communication is key, and we do a lot of one-to-many communication. So we will put out a lot of information to our clients in a bulk way, either through an EDM, we run our own webinars, whatever is very useful to go out to touch as many people with the lightest level of effort on the admin team, but also then identifying who are the people who are going to need that extra hand holding. We know the clients right now, you can probably sit there and lift off your head the clients who are going to cause you the most grief if you change something. They're going to ask the most amount of questions and they will be less inclined to join you on this journey. Get in touch with them early. Don't spring the change on them. Do your one-to-many communication. Reach out to those people who you know will be difficult on a one-to-one basis then. Explain everything and then send them a reminder. So when you pick your date that you're going to go to fixed fee, send them a reminder that you've already discussed this, you've already sent them information, and it's happening on this date. All of these items will make your clients feel as though they've come on this journey with you and they haven't been blindsided. So they're going to be more willing to accept a change.
Absolutely. And I think, as you mentioned, the key takeaway there is that communication is key. But let's say we're in a situation where we've communicated with our team, we've communicated with the clients, we've done everything we can. In reality, there are going to be some people, whether they be internal or external, that have some objections around it. Some might be small, some might be large. I guess what would be great is what some of the more common ones are. And I guess the best way is to kind of manage that pushback that is, potentially inevitable.
Yeah, so the first pushback that usually happens maybe when you're talking to your teams or if there are multiple partners involved, or even you sitting there at the moment on this webinar, might be considering that your clients won't like the change because it's just too different. And they might be questioning, well, why are you changing the model? So I think it's really important, and I talked about it a bit at the beginning of the webinar, to understand that clients and business expectations have changed over the years, and they're also more open to change than you realize. Again, communication and explanation, if you can go down this path, they're going to be much more willing to jump on board with you. And don't forget, when you're communicating out your change, you have to explain to them, what do they get out of this? How do they win? So if you're just going to fix fees and not necessarily monthly reoccurring fees, but just fix fees on their own, provide clarity and transparency. It should give your clients confidence that your pricing is consistent and across the board, that they're not getting ripped off, and that you've actually considered their situation before doing your pricing. They don't get penalized if you have, say, the wrong staff member who doesn't know what they're doing on the job and WIP blows out. It's a total winner for our clients as well. One of the things that we did when we had some team members who were a little bit concerned about rolling out the change, we started with our new clients, because your new clients don't have any background on the way that you work at the moment. They've not worked with you before, and rolling out a process and getting it patted down where there isn't any change is often an easy way to move into this. And then you can roll it out across all of your older clients once you understand all the kinks and how it's going to work in your business.
Awesome. So that's probably, from my perspective, one of the most common ones. The next one, which absolutely comes up a lot, is, the change to fixed fee. I'm going to be leaving so much money on the table. What if I get the amount wrong? How's that going to impact me? So what's the situation here, Beck?
So the solution here, which I put down, is actually a good solution, but it's probably not the only one, and it's more of a reactive solution. So if you have a good clause in your engagement that allows for fee adjustments, because we know scope creep can happen, and not even scope creep in regards to offering extra services, or that phone call where a client says, I need a cash flow for the bank, but none of that was covered in your engagement. I'm talking about when you're digging in and doing a job and you uncover something that you didn't know about. So any good engagement letter will have an ability for you to say to them, if there is something out of scope or we discover something we weren't aware of, we will be adjusting this fee. And then make sure you do that. So drop tools. When you notice that something, when you find something unexpected, stop work, review now what that fee should be and what that's going to look like. Contact your client immediately. So whatever actions you have to take in your engagement letter to make that work, make sure you follow through the step, get sign off on the new fee, and then continue. The other way that you can more proactively address this is do a little bit of due diligence at the beginning of the job, particularly if you're taking on a new client and you're not sure about how you're going to price that. We live in an environment now where most of our clients, if not all of our clients, have some sort of cloud technology for their accounting, whether it's QuickBooks or Xero or MYOB. All these products are now available in the cloud. Ask for access so that you can get a good feel for your clients and what their situation is before you take on a job. Ask for copies of tax returns, financial reports. Do all that at the beginning. Don't do it with your ethical clearance letter. Make sure that you are fully aware of what their situation is before diving in. Now, this might mean you will invest some time and effort into a client who might not like your pricing and might not come on, but it will protect you in the long run and is absolutely a better way of doing business.
Preparation obviously being key. What do they say? If you fail to plan, you plan to fail. So wanting to avoid that. One of the other big problems that comes up a lot, Beck, it's too hard to make changes to our engagement process if I get it wrong. So what's the solution to this problem?
So this is all about that moment when you have to down tools, contact client and let them know that the fee is going to change. So how do you do that quickly and get sign off? Templates and technology. If you've already got an engagement letter, particularly if you're using Ignition, to be able to update that engagement letter, copy, use another template, add in another service, everything is there ready to go. You can update your client and the pricing for your work within minutes, send it out and get sign off and continue on the job. It's not a disruptive process when you use great technology. You don't have to stop and type up a letter and send it off to your clients, get them to print it out, sign it and send it back. You deal with it all online in a cloud solution that has been pre-set up for you to run this in minutes.
Absolutely. Beck, love hearing you talk always. It's a shame that you can't win Thought Leader of the Year back to back. Otherwise, I'm sure you would have had it in the bag this year as well. Now, Beck, I'm going to give you a little bit of a rest. So for everybody, I've noticed a lot of people joining over the last kind of 10 minutes or so as well. Just a reminder, the copy of this as well as the slides will be sent out to you. So don't stress too much that you've missed one of the greatest webinars of all time. You will have that emailed out to you shortly. Now, Ignition is, as Beck mentioned, a solution which can help you not only with the transition to fixed fees, but also with engaging your clients. So what we'll do is I'm going to give you a bit of a run through of what Ignition is, give you a really brief demonstration and show you what the client experience looks like. And then we're going to finish off today with a Q&A. So keep those questions coming in. I know there's been a few. We will answer them at the very end. Now, Ignition, what are we? So Ignition is the world's first client engagement and commerce platform for professional services. So what we're really aiming to do is to transform the way that people do business together. We're trying to spark long-lasting relationships by putting professional services businesses and their clients on the same page. So really what we're kind of aiming to do as a key theme of today is provide some clear communication to the client around the work that we're doing, clarity around the scope, and what we are going to be charging. Now, Ignition essentially is the process of what Ignition does is the process of creating a proposal with industry standard engagement letter in a matter of minutes, having a payment gateway built in, which enables you to get paid automatically from your clients. Depending on the accounting software, we do integrate with Xero as well as QuickBooks, and that enables us to run some automatic invoicing and reconciliation to automate that process and cut down on a lot of the admin, which essentially enables you to run your business on autopilot by automating a lot of the workflows. Now, skipping that one, jumping to the engagements made easy. As you can see, we do have a few partnerships with some industry standard bodies such as Chartered Accountants Australia and New Zealand, the Institute of Public Accountants or IPA, as well as CPA. And for any bookkeepers on the call, we do have partnerships with ABN, the Australian Bookkeepers Network, as well as a few others. So starting up with Ignition, we do provide their latest compliant engagement letter templates. And alongside that, we also do provide a list of over 40, I think it's close to 50 common services that you'll be providing with benchmark pricing and deliverables, which Beck has definitely helped to create, as well as some templates. What I am going to do now, I'm going to stop sharing this open up this window here and give you a very brief run through of Ignition, as I mentioned. So just confirming that you can all see my screen. Beck, can you give me a thumbs up if that's all coming through? All good? Beautiful. All right, so this is the client accept screen and what your client will be looking at when you send a proposal to them through Ignition. So essentially, it's a really intuitive e-commerce style checkout system down the bottom that the client can run through, starting off with an introductory video and a personalized message, which will essentially present some, a bit of insight into what the proposal will hold, enable you to kind of speak to your client without being able to speak to them. We then will build you a marketing brochure free of charge, which enables you to present some further information around possibly the firm, the services that you provide, showing your clients that you are progressive, that you can utilize technology to provide a top level service to them. And jumping next, we then have the ability to present multiple proposal options to our clients. And as you can see here, we are giving the clients extra flexibility. We're presenting multiple options to them, and in doing so, enable us to generate additional revenue from our clients. So it is a win-win situation, choosing which option works best for them. As you can see, we can recommend one of them. And some stats that we ran through last year, I believe over 35% of proposals with options were selected the recommended option. So, your clients, they do come to you for advice, they do trust your opinion. And if you do recommend one of the bundles, they are more likely to select it. So from there, and again, a big key theme of today is communication and clarity. So providing clarity around the services that you are providing, the deliverables that they are receiving, ties very much into the fixed fee of presenting to the client, whereby we say on a monthly basis, this is what we're charging for these services. And again, providing clarity around when that payment will be collected. As far as the payment is concerned, we do have a payment gateway built into the back end, which enables us to facilitate the client payment collection process. So clients can enter their credit card details or their BSB and account number and save it. There's no further direct debit authority forms or anything that needs to be sent out, which enables us to then have better cash flow and kind of remove the debtor conversation altogether. And lastly, the clients can then view the industry standard engagement letter here, scrolling through, reading the terms and conditions. And once they are happy with it, they can simply tick the box here, sign their name, and hit accept when they're done. So really just creating a nice, simple process for your clients to receive the proposal, have an understanding around the scope of work, and then sign it in a succinct manner. Very quickly, looking into the dashboard that Ignition provides, this is really powerful and really effective once you have made the transition to a fixed fee model. These two options, or these two widgets, I think you call them at the top here, showing both revenue and payments or cash flow, is forward-facing projected data. So once you've got your engagements in the system, having an understanding of when the revenue or when your cash flow is going to actually be coming through in the months to come is really powerful in being able to make some business decisions on the back of that information. To give a very brief overview, when building a proposal, we have a workflow along the top here. And when we jump to services, this is when we can present whether it's a recurring or a one-time service. As mentioned earlier, Beck has done a whole bunch of work in providing some templates that come with your Ignition account. So we can simply select a template that's been created. The proposal will then be built. We have the ability to then make some specific changes if need be. So while we can have it completely fixed, we can also say for this specific client, we might need to make a change here or there and customize it. We can then select the terms template from the industry body that we're a member of, and then simply send it off to the client there. So a very simple engagement process, very simple to build out the proposals. After all of this, what we will be doing as well is giving you the option to have a bit more of an in-depth demonstration of Ignition. So in the next poll, absolutely let me know if that is something that is of interest to you. So what I'm going to do is throw that in the poll now. I can just move this around. What is next? I'm going to launch that. And once again, guys, participation is absolutely welcomed here. If you are interested in learning more about how Ignition can help your firm, then please select that. If you would like the resources as well as a free trial link, that second option is also going to be for you. So might just leave this for another 10 seconds or so while you guys are filling that out. And after this, we're going to jump into a bit of a Q&A. So if you guys want to prep those questions, send them through into the Q&A box. That is going to be great. And maybe I'll just leave this up for another minute or so. So lastly, we've got the Q&A. Any questions that want to be asked? While you guys are typing that, I do have one question that did come through to the chat earlier on. So Beck, Brett wants to know when you're charging a fixed, I think this was going back to the service matrix that you were looking at earlier. When charging for a fixed BAS fee, does this include the bookkeeping to get it to the calculation stage, or is this just for the calculation and preparation of the BAS?
So when we were looking at that, and particularly, so I'm a director of an accounting and taxation firm primarily. We do have bookkeeping services, but we do BASs for clients where we don't do the bookkeeping. And because of that, and because services can change so much with your clients, we're very specific and carve it out. So this is just the BAS. If we're providing bookkeeping services, there will be a completely separate bookkeeping service line that is included for that client. And then inside bookkeeping, again, it's different things. You know, are we doing only the bank reconciliation? Are we managing their debtors and creditors? What software is involved? Are we doing payroll? We break all that down very clearly so everybody knows how much is being charged for every service.
Awesome. Hopefully that answers your question there, Brett. So Beck, one of the big questions, I guess while we're waiting for some more to roll on through, would it be better to move my clients to a fixed fee at the start of the financial year, or does it not really matter when that change kind of comes on through?
It doesn't. If you're going to use a bill on completion model, you can really run that at any point in time. If you're going to move a big bunch of clients to monthly reoccurring, I would suggest trying to do that at the beginning of the year. However, it is possible to do it at other times during the year. I have got a resource that will be available shortly that explains how you can actually do that and manage that process effectively. But whatever makes you comfortable. We're all busy. Sometimes everything doesn't happen before 30 June. Just move to fixed fees. It's a better way.
Yeah, awesome, cool. Got a question coming in here. Did some of your clients want to pay more in line with the service period rather than spreading out over the 12 months entirely prior to the service being provided?
Absolutely. And that's why we do a combination of monthly reoccurring revenue and bill on completion. We do have those mix of clients. And we have some clients who really liked that comfort around, this is how much I'm paying every single month, and I know that I'm not going to get hit with any big bills at any point in time. That really worked well for their cash flow. And then we've got some other clients who are quite comfortable with the amount that we're charging them, but they would prefer it to be aligned with the service delivery. And because we take payment details regardless of our billing model, we're confident to use either. So even with our bill on completion clients, and even if it's a large amount, we can still take payment details up front. We'll raise an invoice at the end of that job, and we'll tell them our terms are they're currently 7 days. So they have 7 days to raise a query. And if there aren't any, that we take the payments. Otherwise, we can pause it for a couple of days to resolve their issues. We next to never have to pause it, and we can just move straight through. So it's just giving your clients that extra little bit of comfort sometimes processing that way. But if you use monthly reoccurring, absolutely you need to be in charge of your payments, because there's nothing worse than someone agreeing to pay you monthly and they're not actually doing it.
Awesome. I think that question definitely answered. Another one that's just come through now, Beck, in a single proposal for like a single client, can I use Ignition for a combination of both fixed fee as well as upfront fees?
Oscar, I think you can actually answer this. I know what the answer is.
I think I can. I like hearing your voice. So I wanted to ask you. Absolutely, I guess is the answer to that question. As highlighted earlier, there can be a combination of both upfront payment payments as a one-off billed on completion, as well as a whole host of different recurring fixed or otherwise models. Another thing, I guess, to keep in mind, while we do often say recurring is done on a monthly basis, that isn't the only way that you can collect payment. We do have the ability to collect, or anyone has the ability to collect payment on a weekly, a fortnightly, monthly, bi-monthly, quarterly, or annual basis. So however you're wanting to bill your clients, you are able to do that through Ignition. Another question that's just come through now. Sounds great. Where do I begin? So I guess really, what is the first step? There are a whole bunch of people that are completely hourly at the moment. What is the first step that someone should be doing?
It all comes back to figuring out what your client service matrix is. You can't determine your pricing if you don't know what your services are and who you're offering them to, and having a really good understanding around your client categorization. So those items that I went through, that's where you need to start. Figure all that out, get your team involved in the process, and you'll be able to roll it out in no time.
Absolutely. And again, just as a reminder, the slides will be sent through. So that example around that client matrix will be sent through to you. One more question here. We might get one or two more if they can come on through. Would the terms of my engagement need to change when I move to fixed fee? That's a great question.
Absolutely, they will, depending on what your registrations are. But if you have to comply with APESB, then you need to have a look at the fee section of their guidance around in the engagement letters, which is in APS 305. When you go through that, you're supposed to discuss, or at least tell your clients, the way in which you're going to bill them. If you're moving from a time billing to a fixed fee, then you need to put that in. Plus the fixed fees when you agree upon the fee. So that will make sense that now you're talking about it, whereas maybe in the past you glanced over it or just chucked in some vague hourly rates.
Absolutely. And as mentioned earlier, the engagement letter templates that are provided through Ignition with the industry bodies, these have these changes already built into those engagement letters. Is that correct, Beck?
Correct. And depending on whether you're a CA, a CPA, IPA, or anyone else we have a partnership with, you will get that approved engagement letter. Also important to note that that is the template engagement letter. It will go into your Ignition file. You can make changes to that. So long as you kind of keep the standard format, you can add some extra paragraphs in that might relate more to your business. We've done that. I haven't edited or removed any pre-approved paragraphs from the CAs, but I have definitely added my own in for items that are important to us in the way that we operate.
Beautiful. Another question, might make this one of the last ones. I guess if more come through, then that's great. Do you still use timesheets internally to monitor the amount of time spent on client matters to compare the fees that are being charged?
Absolutely. So that's not the only reason why we run timesheets. And when I first went to fixed fee, I made that huge mistake of getting rid of timesheets. I use them so that I can monitor more so where my team is spending their time, and not because I don't trust them, but making sure that they have the skills and education and the efficiency to be doing that work. If I've got a team member who consistently takes 5 hours more than everybody else to do a particular task, then I know they need more education and more training. The only way to really know that and be able to monitor that is through timesheets, and then that comparison of WIP versus what was our billing. And then that just, it's very rare that we've actually had to use that to then readdress our billing before, because we've gone through this process of developing out your client matrix, but it will also give you some comfort if WIP is consistently blowing out. Maybe you need to think about your pricing again.
Fantastic. Hopefully that answered your question, Leanne. One final one that's here. Moving to a fixed fee model, what happens to the outstanding work that is yet to be completed?
Well, see, that all depends. And I did go through that in a little bit more detail, so I don't want to bore everybody and go through it again. But it all depends on whether or not you're going to a bill on completion or a monthly reoccurring revenue process. If you're doing bill on completion or you're moving from time billing, to fixed fee and you're doing bill on completion, and some of the WIP that you have accumulated is in regards to a job that you're going to bill under fixed fee, then that will come across. But if the WIP that you've accumulated to date is all in regards to work that is completed, just draw a line in the sand, raise an invoice and get it off your books.
Beautiful. Another question from Jono. What KPIs do you look at in your business now? Lifetime value, MRR, what ones do you like looking at the most?
I look at average client revenue because one of my goals is to sell as many of my services that I have to all of my clients. I like to have my clients really loaded up with all of our service offerings. So I look at that client, that average client revenue, constantly trying to push that up. So that's what we want, less clients, but more money. And I also have a look at our monthly recurring revenue because it is a nice place to be. It's nice to know that money comes in all the time. So we do have some targets about wanting that to consistently increase, even though we give our clients the flexible choice between both of them.
Beautiful. All right. Seems like the questions have dried up. I guess last chance to send one in and get the knowledge of Rebecca to answer them. Seems like that might be it though. So I was going to say as a reminder, but it is something that I have not mentioned yet. So for those that have stayed on to the last minute, this is where your reward comes on through. As mentioned, Ignition is a great way to be able to help you to set up not only the fixed fees, but also to create a streamlined engagement process. To help you get started, we are offering everyone on this webinar a 50% discount on our professional and scale plans for the first 3 months of your subscription. So after this, as mentioned, we will send the webinar recording as well as the slides and any trial links for those who requested it. For everybody else, any questions, any help or anything else, feel free to reach out and someone from our team will be able to help you out and help you make that transition to a fixed fee model. So that's it, guys. Thanks so much for jumping on today. Beck, thank you so much. Your wisdom is always appreciated. Always love being on these webinars. So thank you very much.
Thanks for having me, Oscar. Have a great day, everybody.
Awesome. All right. See you later, everybody. Bye.